there's a few things I've been mentioning in the Discord the last few weeks. There's a few ways of going about this currently challenging environment. One of them is just focusing on the long term, saying, you know what, I'm not trying to make money in my short term account. Let me just pick my spots. Let me look at quality companies. And when they get to good prices, let me buy those. Let me reallocate, get rid of the things I'm less convicted on and buy the stuff I'm more convicted on for the long term. That's one approach in a market like this. Another approach is what, Red is doing. Went to 100% cash and just day trading the indices and has been killing it. Another approach is what I'm trying to do, which hasn't worked, like kind of stick with it and try to find the alpha. I've had a hard time, still up like 80% on the year, but I gave a lot back from the peak. But I've been pretty much down for the last week or so, almost every day. So it's been hard finding the alpha. One thing I am adding to my repertoire, I do have a account where I purely sell puts, and it's a small account, but I decided in my large trading account to start doing that, and it's been successful. Selling puts, I've been doing it on ASTS and on Hood, and I'm thinking of doing more of that. But The Godfather, how are you navigating this? Are you even trying to make money short term? I know you also look at long term. For me, I feel compelled.
I run two buckets, and the allocation between the buckets, the long term and the short term, changes relative to market conditions. And in this kind of choppy tape, I'm definitely doing less in the short term bucket and more in the long term bucket. I'd say it's about 70-30 right now for me. So I am DCAing into, some of the long-term names that I like, because I do expect that the second half of this year, when the market starts to focus on more of the offsets or the other parts of why Trump was elected, the no tax on tips and Social Security and the tax cuts, both for business and, just talk about potentially going to a flat tax for personal and regulation, all these other things. And we get through the tariff headlines, I think it's going to be a buoyant second half of the year. So look, there will become a time again when your growth companies or your companies that have great cash flow, double-digit top-line growth, and are trading at defensible multiples will perform again. So, you pick away and you add some of those things. In terms of short-term trades, looking for things that are working. There are always pockets of the market where the wind is at your back, and right now we're seeing it in gold. Just 2 seconds on gold and why I think it's a win-win here. Obviously, it's an inflation hedge, so to the extent that the Fed leans that way, that's potentially bullish for gold. Right now, you've got the administration really pushing hard on lowering rates. Lowering rates means lower U.S. dollar. Lower U.S. dollar drives more demand for gold. Right now, the producers are benefiting from their up costs, which are primarily diesel, and the lag in energy prices relative to the other commodities. The largest byproduct for gold production is copper. That's hitting new highs here as an inflation trade and consumption for data center, et cetera. So for a long time, these things have traded at material discounts. And for the most part, the group is trading at discounts to NAV still. So for that reason, I'm long gold, and I'm long it through the producers, not the commodity itself. I think there's a catch-up trade. The producers typically outperform the commodity by 3-to-1, and that ratio has been 2-to-1 year to date. So I think gold can continue to perform in this market. It's a great place to sort of hide until bids come back into, and the market gives you a bit of an all-clear sign on wanting to reward and expand multiples in growth companies again. And then there are other small sectors, right? Like Europe along this EWG, which is the Germany ETF. Pointed out in the Discord community that a small pocket of the China trade has really been outperforming, which has been notable this week because there's been a slew of fintech names in China that reported, starting with QFin, which is, again, making another 52-week high today. Pull up a chart of QFin. Just look at this. And there's been no growth reset in this name year to date, really. We're now at new highs, and we saw nice reports rewarded out of FINV. We saw the same thing out of LX in their report this morning. QFin was up 10% on their report on Monday morning. You've got another name, YRD.
These are all Chinese fintech?
Yeah, these are all Chinese fintech names. And again, this isn't a fundamental trade. This is just looking for very scarce pockets. You asked the question, what am I doing in this market short term? These are the areas. And again, these are all just trades. When the momentum shifts out of these, we'll be gone. But for now, you do more of what's working and less of what isn't, right? That's really the motto.